Right. So I'm very bullish and I have a very bullish thesis, but I've been kind of mildly bearish for the last maybe 5, 6 months, just because I've seen the alts and meme coins running very hot. And just historically, when that happens, we come back down. And this is exactly what we saw. I think there's been a lot of capital flooding the markets with altcoin treasury companies and the like. And I think it's just been a massive distraction. It was always due to overcorrect. And I think that's where we are at now. And Bitcoin usually will come down with everything else when it comes crashing down. And we hit 107-ish today. So I think this is probably a good correction. Also, we saw a massive amount of liquidations, also largely due to alt speculation over the past 3 days, maybe. I think people were getting liquidated 5 or 6 times, right? The big crash liquidated them, and then they went long again, and then they got liquidated, and then I think maybe some shorted the market, and then we went down again. So it's been a wild ride for a lot of these traders. I think when a lot of this capital is flushed out, that's when we have more solid price discovery and sounder footing to go up on. And I think we got a taste of October, early October, and there's still some days left in the month to go. As Bitcoin matures, we're going to see less volatility. And this is a function of, I would say, two things. One is the Bitcoin treasury companies, especially Strategy, which has scooped up a large amount, and they are a very consistent, a very reliable buyer at any price. The second is the ETFs, the Bitcoin spot ETFs, largely IBIT. And they have also proven to be a very reliable source of demand for Bitcoin. And I think with these two driving forces, it was always bound to reduce volatility, at least in the near term. But longer term, I just don't see Bitcoin sitting idly in this range or even in the 200,000 range. And I think we're seeing a foreshadowing of this with gold, which is the largest asset on the planet, which has skyrocketed and went up by 50% this year. It would be more like Bitcoin's trying to lull everyone into a false sense of security that they have time to accumulate. But unlike gold, Bitcoin is incredibly scarce and finite. There are only 21 million coins. Gold production will ramp up as demand increases, and we will see that. And we just don't know how much gold there is out there in the world. It's impossible to mathematically, definitively quantify that, but you can with Bitcoin. So I think we're going to see Bitcoin do its thing. It'll mirror gold, but probably in a more spectacular fashion.
So just to follow up on that, you could argue there's somewhere between 15 and 20% of all Bitcoin now is held in these secondary derivative forms, right? And if I trade a DAT stock, or if I trade an ETF, or if I trade an option on an ETF or a futures contract, that's not creating a transaction on the Bitcoin network. So there's interest on the positive side, there's a broader user base, easier access, easier on-ramping, broader user base. But at the same time, there's less actual activity on the network, which some people cite as a sustainability threat. So, this is your space. So is the diversification of packaging of Bitcoin net healthy, or is it kind of net dangerous to Bitcoin, the network, and to Bitcoin's internal ecosystem?
So I've theorized about this before, that you might have a bifurcation of the Bitcoin network, or a split between approved Bitcoin that sits in treasury companies or with corporations, and then you have free Bitcoin, which is free flowing, and people are transacting it as money and self-custodying it. And that's still a possibility down the road. I don't think it's a near-term phenomenon, but down the road definitely is possible. But I would say Bitcoin moves in cycles, not the price cycle, but just in terms of adoption and usage. And you see spikes in high transaction volumes, high fees, and then there's mass panic that, it's too expensive to transact Bitcoin. And then you have lulls like now, which is a period of less activity. People are not really transacting on chain. And in part, it could be due to other layers of Bitcoin, like Liquid, like Lightning, or just transacting on centralized exchanges and through custody swap agreements with custodians and whatnot. But I think this is just a temporary phenomenon. And as you get more Bitcoin adoption, especially in the emerging world, Latin America and Africa, where people don't have access to those vehicles, they're going to be forced more or less to hold it in self-custodial wallets or just a wallet of their own. And that will lead to on-chain usage. But it's a interesting phenomenon. When it's busy on-chain, then the sky is falling because fees are high. When it's low, then people say, oh, there's no one to pay the miners and there's no security budget. But I think overall, Bitcoin does manage to balance out both sides eventually. But there is a skewing of Bitcoin development priorities towards layer twos, which I think means we need to make some adjustments to make spam reduction a thing on the main chain too. Because if everyone's working on a layer two, there's not much incentive to transact on the main chain, especially if people are spamming the chain with JPEGs and NFTs. Well, theoretically, it would just be like two prices of Bitcoin. Similar to Argentina, you have the dollar blue and then you have the other price, the official price, right? So you would probably see a lower Bitcoin price with an ETF and a higher price for free-flowing spot Bitcoin in your wallet.
Samson, the last time you and I spoke, I believe we touched on your $1 million Bitcoin prediction. I think you said that that was within the next 5 years, and that was probably about a year ago now. Is that still in play, or have you revised it given some of the things we've talked about so far?
No, I think it's just delayed. And I've been predicting 1 million for maybe 2 years now, because all of the factors to catalyze that shift to 1 million are here, right? The previous dull factors for bull runs has been exchanges and their inability to onboard a lot of people quickly because they're bottlenecked. But with ETFs, I think this is the key factor in my theory, is that there is no bottleneck anymore because the ETFs can accumulate any amount at any time because they'll buy on behalf of the users. So you mitigate that retail barrier that kind of stymied previous bull runs. And the matter of the 1 million run is just time. And things can delay it, like crypto heating up, I think will always delay it because people allocate capital. Even serious investors might allocate capital. Like I think Cathie Wood was buying Ethereum treasury companies, right? All of that has to come back to Bitcoin. And I think all of it will be very violent. I also have another theory called max pain theory. And that is like the most painful outcome for the most people is the most likely outcome. So if we think that Bitcoin volatility is always going to be low, and we just gradually step up to 1 million and to 10 and to dollar parity with sats, that is the best case for the world. Everyone has a long time frame to accumulate. Everyone has time to buy. And I don't think that's going to be the case. And I think a lot of people realize this. If you look at Saylor and strategy, he's buying anytime. Like it doesn't matter if it's a top. He doesn't care about dips because there is this urgency because the time is running out to buy Bitcoin at these low prices. So we're going to see a fast run up, and gold is a good parallel for what we're likely to experience with Bitcoin. If you look at the picture circulating right now on the internet, there are people lining up, forming queues to buy gold, and gold is at an all-time high. So nobody wants Bitcoin when it's in the low 100Ks. But once we get to like $500,000 per Bitcoin, I think the world's going to wake up. Central banks are going to wake up, and nation states are going to start joining the race. And that's when you go to 1 million very quickly and beyond.
What's the time frame for that $1 million prediction now?
It's difficult to say, but I would say sooner than later. So every day I wake up, I'm expecting we're going to see like 100K Omega candle on the charts because it's been suppressed for so long. Like we should probably be at 200,000, I think is a fair market price based on demand. And if you look at inflation, just if you assume inflation, I did a calculation, real inflation is probably 11% or something like that if you base off of eggs. And if you factor in our previous high peak in 2021, we're just keeping up with inflation. So we're kind of tracking M2. We're maybe tracking gold a little bit, but we're nowhere near where we should be in terms of real price discovery happening.
If this happens, what does it say about the state of the US economy? And should people be concerned?
Well, the state of the US economy is a problem, right? There is $37 trillion of debt. And I don't think people fully appreciate how big that is and how much of a problem it is globally. And I think we're seeing countries move away from the US dollar at the same time. BRICS countries trying to de-dollarize, a lack of demand for buying US treasuries. So it's not like Bitcoin is a problem for the US. If anything, it's a solution. I think the US can rebase to the dollar. There's lots of precedent for fiat currencies rebasing to a harder currency. But overall, regardless of Bitcoin, there are problems in the US, and those problems are coming to a head. And if you look at the US policy on a whole, they've largely embraced stablecoins. And that is because they need a buyer for treasuries, and stablecoins are that buyer. So we're seeing, I think, new companies, new entrants. Sony is one of them. Cloudflare is another. Just companies that you wouldn't traditionally associate with Bitcoin, crypto, or stablecoins. They're trying to make a push here, and this is because the US needs that. And they need that because there are problems with the economy.
I believe it was at Consensus Hong Kong, Samson, and we talked about nation states adopting Bitcoin. I know we heard from an IMF managing director, I think just a few days ago. She said, accept reality, fiat is moving digital. I just want to see if you'll give us any intel here. What can we expect in the next year when it comes to nation states adopting Bitcoin?
I think it's heating back up. We've been working on nation state adoption as Jan 3 for years now, and we always hit roadblocks, but we do get a lot of meetings. We've met with maybe 5 or 6 central banks now, and our pitch is really you should buy Bitcoin and put it on your balance sheet. But it's really difficult to get a country to move. There are always more pressing issues. There are scandals. There are re-elections to consider. So the window of opportunity and the ability for a country to do something is limited. But we have some interesting discussions going on right now. And if one of them materializes, I think we're going to see a large wave of nation-state adoption coming in 2026. But people should buy spot Bitcoin and they should custody it themselves. I believe as the world gets more chaotic and governments are looking for ways to fund themselves, you're going to see more pressure exerted on people. And this is not necessarily saying there will be a 6102 executive order, but there will be attempts to take your Bitcoin away, either through taxing unrealized capital gains or similar programs to that. The intent of that is to finance the government. So self-custodied Bitcoin is the best defense against that.
What do you think is going to happen with the strategic Bitcoin reserve in the US, just given the experience you've had trying to get these kind of strategies done with other nation states?
So the US is quite far ahead, more so than many other countries. Like we've talked to government officials in Japan and Korea, and even though we point to the US and we say, look at everything that's happening there, they've passed legislation, and we sort of outline the long process in which it takes for a country to buy Bitcoin. It's not just about creating an SBR, it's figuring out how you will acquire, how you will custody, because the whole point of having Bitcoin is it's a sovereign asset that you have yourself. If you buy Bitcoin as another country and you just keep it with a custodian in the US, that kind of defeats the purpose. It's like Venezuela keeping their gold in London or something like that. So there's a ton of stuff that countries need to do ahead of that, but they seem to largely not place the urgency upon it, even though the US is moving ahead so much. And I think the US will keep moving ahead, if nothing else, because of necessity, because of the debt and the lack of buyers for treasuries. So we're seeing that they have an SBR and they have approval to acquire budget neutrally. And there is the Bitcoin Act from Cynthia Lummis that is being pushed. And I think there is also legislation for de minimis tax exemptions for spending Bitcoin as well. So there are so many positive developments for Bitcoin in the US right now that it's difficult to not see other countries emulating that. But the US did actually accumulate some Bitcoin. I think it was announced yesterday. They seized another 121,000 Bitcoin from the proceeds of a pig butchering scam. So the US just added. But the thing to keep in mind here is like having a Bitcoin reserve that's largely based on seized assets is a bit dangerous because the incentives are to go and seize more if they're not buying more. So I think there should be a push to pass a legislation like the Bitcoin Act that allows for not budget neutral accumulation, or perhaps a Bitcoin bond structure where they can sell sovereign debt to buy Bitcoin, which was, I think, presented at a Bitcoin policy event last year. They're called Bitbonds, and the plan was to buy $200 billion worth of Bitcoin in this vehicle. So there are a lot of ways that the US can even move further along, and I think they should.